The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan with the weekly perspective for the week ending 19 September 2025. Well, I'm going to talk a little bit more about silver this weekend. First thing I want to do is show you where to find some of this stuff. There's a lot on this landing page that you can go to. As you can see, our Facebook, LinkedIn, X or Twitter feed, and LinkedIn are all here at the top. If you just click those, you'll go immediately to those places. And on top of that, one of the main things to go to if you're not a free member, which you should be, just put in your name and an email here. We'll send you all this without you having to look for it. But if you want to search for it, you can go to the blog. And once you're on the blog, there's a lot here. These are the most recent interviews. You can get to them. But I do a lot, and there is specific. So you could type in here, and I typed in search for Silver Eagle program. And just on that alone, it brought up 19. This is one of the most recent, and this is something I'm going to bring up for everyone's attention. For those that follow, me closely, you're probably aware of this. If you don't, you might not even know how to work through the blog and what this search feature can do for you. This is something I wrote. It looks like it was posted September 3rd. My eyes are holding. So early this month. And what I talked about here was about the Silver Eagle program. It's really at law, Silver Liberty. I'm not going to worry about that. I'm not going to read it to you, but I talked about how we had 139 million ounces of silver in the National Defense Stockpile, which is also considered the strategic stockpile. That was 139 million ounces, which you can see right there. And I go through what happened, what the law was, when it was enacted, the first Silver Eagles, the transition to the market purchases, what ran out of silver domestically, which was initially put in the bill that you had to source silver from the United States, quickly ran through the stockpile, and all of a sudden we had to change the law to say, hey, we get silver wherever we need it to continue with the Silver Eagle program. Several times the Mint has failed to deliver on the demand that was imposed upon them. I'm not going to debate that. That's a fact. Whether it was delivered or not, I'm not going to go there. But I will say that there are instances where it's a foundational argument that the Mint was not meeting the demand. So referenced everything here for all of it. And so I'm going to go on that basis and talk a little bit more about what's happening in the gold and silver markets. So before I move into the main meat of this update, I want to show you, this is from Tavi Costa on his X file. This is sourced from Bloomberg and Tavi's Crestcat Capital over here. And you can just see that the imports in India have just gone up, up, and up. It was interesting. There was a pretty good depletion here. And what happened was silver was at an all-time high in the rupee, and it was selling off. So some of that big demand that was globally was met by Indians unloading their silver because it was, again, at a record high. What I'd like to show now is from Bob Johnson's gold sheet. I'm on his mailing list, have been for years. Shout out to Bob again. So here we have year to date, what the amount of gain is. In the gold market, 40%, palladium about 26, platinum 56, and silver 49. So year to date, January 1st till this 19th, silver outperformed gold. Palladium was the worst performer at 26%. I think it's important to note that the HUI is almost 110%, and the XAU is almost 7%. Point being is that the indexes have outperformed gold by better than 2 to 1. So if it was 2 to 1, it'd be 80%. And they're, again, 110 and 107 respectively. So this shows and it's confirmation that we are reestablishing, I think, the last major trend up in this major bull market, and that the shares are outperforming the metal itself. That's a very positive sign. And I will reiterate that this is probably the best place you can be if you're new, or if you have established a physical position that you're happy with. If you're going to add to your position, certainly would look better to do it on the equity side. I'll be a little bit careful. Not every junior out there is going to skyrocket. Although when this FOMO takes place, and it's maybe just beginning, you could see almost anything with gold and silver in its name increase, not necessarily in value, but in price, because there could be, I say could be, panic buying at some point. I'm not forecasting that, but it certainly did happen in the late 1979 to 1980 period. All right, so pressing on, I just want to continue with the strategic asset, silver. First of all, what does critical really mean? In Washington's way of saying we can't function without a reliable supply, when the U.S. Geological Survey put out in the 2025 draft list, silver was among the additions along with copper and silicone. So policy permitting, procurements are lining up in favor of securing some domestic, or I should say worldwide, amount of silver. Now, how much, that remains to be determined. And of course, there'll be pushback from probably more of the establishment types that one, we don't need it, two, it's really not critical, and three, forget it, the U.S. government is going to buy it. However, if they do, and I believe that they will, let's look at some potentials. So a symbolic buffer, and I mean symbolic, would be like 25 to 50 million ounces. If we go back to the historic that I just showed you when they had a strategic stockpile, was down to, I think it was 139 million ounces. So that means a historic echo would be between, let's say, 100 and 150 million ounces. And a just in case tech reserve, which is going to use silver for the Department of War, which has been renamed, and technological wherewithal, it could be above that. The Saudis and the Russians are the first really to talk about silver, or I should say move into the silver market. And these are two headlines that matter. First, Saudi Arabia's central bank appears to be, or has, holding nearly 1 million ounces of the SLV, which is quite a bit of silver, and they do have the ability to take delivery of silver because they have that amount. In other words, they're an authorized participant. It's a signal that sovereign money is testing silver exposure, and this again was done by Russia, which bought around $535 million worth of silver in a few years back. I forget exactly, might have been a couple or so, but they included platinum as well. Whether this is for industrial needs, monetary needs, or both, that remains to be determined. But silver never asked the question, why are you buying me? It's just being bought. So silver has a unique aspect, and that's both it's irreplaceable in high-density electronics, photovoltaics, power, electrical, and a historical value source trusted when paper currencies are failing. The official quote-unquote critical status accelerates the industrial side, and that's what I'm talking about today. Sovereign purchases add to the quasi-monetary layer, especially if more countries follow behind Russia, Saudi, and I'll have to include India. I'd say the takeaways are, these are policy tailwinds. The draft that the U.S. will list silver as a critical metal does send a message and is probably reverberating through other nation states, including those that have not participated at this time. Watch the final list of any defense logistics agency sending out any procurement notices. Saudi, the SLV, and Russia's budget line items together mark a regime shift towards some official silver demand. And of course, the float in silver is tighter than you would imagine. And I did a video on that for members and non-members recently, and I talked about it in at least one or two interviews. So silver has graduated from useful to required, critical, a growing chance of being treated as a strategic asset by governments. This doesn't end the volatility. In fact, it could increase it, but it certainly reframes it. More and more nation states are taking a harder look at the silver market. The next leg up won't be about memes. It'll be about budgets, policy shifts, and it will be probably more and more purchases. Stay disciplined, stay diversified, and remember, when money lies, freedom dies. If the U.S. were to add, let's say, the 140 million ounces of silver to the strategic stockpile, that would be almost 17% of what's mined on an annual basis. And that's a big increase, especially because it would be physical. So again, bullish on the silver market, and I'm going to wrap up with a little bit of comment on gold. Gold has certainly been very, very strong of late. And those that have followed my work for a while know that I talked probably 2 years ago, thereabouts, about the run to gold had begun. And that was before gold made the big move it's made. And what I said was that the central banks are moving into gold in a rather aggressive way. Smart money usually goes in first. And that would see the market go like this. And I use the analogy or the metaphor of running. And I said at first it'd be like a light walk, then a full walk, and then a strong or brisk walk, and then a light jog to a full jog, to a fast jog, excuse me, fast jog into a slow run, your run, and an all-out sprint. And that's the way this market will move. There will be a time in the future where people will start running to buy gold because they're worried about the financial stability in their given jurisdiction, be it India, be it Australia, the United States, Canada, South America. It really doesn't matter. All these currencies are failing, and they will continue to do so. In the meantime, the powers that be, the elite banking institutions, will do their best to mitigate the problem and probably propose and implement the system that they have in mind, which of course is a all-digital system based in a system that you could actually program the money. So interesting times ahead. I wish you the best. I'll be back with you next weekend with another weekly perspective.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't